Hi, everyone. Welcome. As usual, I'm here to help you review the market, both technically and fundamentally. And as usual, I will start sharing the macroeconomic calendar. Let me tell you something about the macroeconomic calendar and the fundamental environment. Uh, we are seeing today a sharp recovery in the greenback all across the board after the holiday in the US. We have a pretty dull Monday due to the absence of macroeconomic ratings and, of course, the absence of data coming from both Europe and the US, right? Um, there's a lot of things you can take out of the charts regarding that fundamental background we are living these days, right? Because despite the dollar's strong based on a March rate hike case ever since Yellen testified before the Congress. There's also a lot of political uncertainty going on, particularly in Europe and the US, right? So what we are seeing, it's a stronger dollar, but the strength is being limited against safe havens yen, safe haven gold, right? And while the slide in European currencies, it's steeper in the euro because of its self-political woes, name it upcoming elections in Germany, Dutch elections, France, it's also going to be polls this year. In between the upcoming 4 or 5 months, we are going to have a lot of elections in Europe. And there's the possibility of a referendum in Italy about the government, about early a new election in Italy after the signing of a prime minister and failed referendum. And there's a lot of uncertainty going on in the market. So despite dollar, it's generally stronger, right, due to that speculation of a March rate hike. The fact is that safe havens are probably not the best choice in a day like this. Okay, so I will start sharing the calendar with something that will reinforce that concept. Right, we have today the preliminary February composites from the euro area, France, Germany, and of course the whole area, right? And the numbers are pretty much outstanding. Sorry, they're showing us that the economies are growing at a much faster pace than expected, right? I was taking a look at the composite index in Germany, 57. It's, I do believe, over 3 years high, right? We have stronger than expected growth in services, in manufacturing. Yeah, we have a small lag in here in France, but keep in mind that Germany is the strongest economy across Europe, and generally speaking, her healthier readings in Germany tend to boost all the area, right? And what's also impressive, if you take a look at France numbers, even despite don't move the market, right, is that we have a steadily above 50 readings, right? And a small tick down in manufacturing is hardly reflecting the number because we have spent many years in the red below 50 and getting even worse than expected readings. So overall, this data, it's quite positive for the euro area. It's telling us that growth is it's moving at a fast pace, and yet the euro is below 600 because of the ongoing uncertainties. I know I didn't mention them, but of course, we have another bunch of uncertainties coming from the US. As we don't know what the new administration is planning, right? We have that phenomenal tax reform to be announced last week, right? There's a speculation that we will know about it next week, meaning by the end of February. But still, there are no news on that, and the market may begun to be disappointed if we don't have something actually to work with. You know what I mean, right? Anyway, the latest dollar rally, the one we have seen in the Asian session, right, has come off the back on one of Fed officers saying that it's willing to vote for a rate hike on March, right? So today we have a couple of other members speaking, and tomorrow we have the minutes of the latest minute, right? So market is waiting for those to decide whether or not to keep on buying the greenback. But in general, the tone is quite positive. We also have preliminary PMIs for the US later today, right? Expected with a modest advances. So that will reaffirm at least intraday dollar's bullish tone. Okay. Taking a look at the calendar for the rest of the week, I was watching GDP readings the last quarter of 2016 for UK could be the one relevant and one big market mover. You know, we have been talking and talking about that being resilient to Brexit ever since, I don't know, we have negative numbers June, July, August, but we have a strong pick-up in economy after that, on economic ratings, I mean. But I don't believe those are sustainable. We have discussed this multiple times. And lately, right, this last month, we have really disappointing numbers coming from the UK because inflation is skyrocketing. And at the same time, wages are not growing, consumption is shrinking. Everything is telling us that the Brexit fears and the Brexit consequences are reaching consumers, right? Everything is telling us that the market is not willing to buy the pound, and that because of fears of what the economic situation will be after they trigger the Brexit. By the way, there's a good chance that it will happen in March because the Brexit bill has already passed one house of Congress, and today it's being analyzed by the House of Lords yesterday and today, and we will probably have a resolution on that later today, right? Anyway, inflation in the euro area, we're expecting a negative number, right, monthly basis. And if that's the case, that will be reaffirming what Draghi said in the latest ECB meeting about the uptake in December having been temporal and not a factor to take into consideration. So somehow a negative reading in EU inflation will tell us that the ECB is nowhere near, right, tapering quantitative easing, and therefore that will keep the euro under pressure. I will take a look also at housing data in the US because we had some negative numbers for several months, and it seems that it has the sector has started to pick up with the year. But I would like to be confirmed with further positive numbers. Okay. GDP, German consumer confidence. I don't expect this to be disappointing numbers, right? Everything's telling me that Germany is healthy and keeps on growing. The problem is that Germany is not the euro area, and at some point, regardless how positive the German numbers are, all the area cannot keep resting on the shoulders of Germany, right? Anyway, more job owning from Fed's members. I believe that that's the key, right? The market is really focusing whatever the Fed will do with March rates ever since Yellen spoke last week, right? And on Friday, the most relevant things to watch will be new home sales and the Michigan sentiment because it ticks slightly lower in January, but still showing strong confidence in the economic recovery. I do believe that most of the U.S. recovery depends on for now, right, on whatever Trump has to say, rather than sorry, rather than on how the economic situation is developing. Sorry for that. I have anyway. Let me change back to charts. Okay. Okay, give me a second. Let me pull my charts up. Here we are. Okay, here we are with the charts. As I was saying, the euro broke lower, broke below the 600 figure, and the downward movement accelerated, even despite we have those strong growing figures, right, coming from the region. What I'm seeing in this chart, what you can see in this chart, right, it's that we are back to challenge the monthly lows around 520, the lows that the pair reached after year-end testimony, right? So uh, that's the first relevant support and quite relevant level in the sense that if it breaks below it, there's not much in the way towards the multi-year low post in January at 340. Short-term readings aren't favoring such decline. I was watching these lows around 450, 457, if I'm not wrong, yeah, as the next probable bearish target on a break below 120, and below that 400, and of course 314, right? To the upside, uh, we have this Fibonacci area. Let me show you here, which is the 23.6% retracement, right, of the post-US election decline around 565, right? And as you can see in the, or ever since the pair broke below it, it has been quite a struggle around the level. It has not been an easy level to surpass either side. The pair struggled to break below it. When it finally did, it extended sharply down. It failed to break higher, so it has been acting as a major resistance early January, and then again it bounced back after a modest brief decline below it. So here we are challenging it again and breaking. So somehow it's telling me that bulls are going to really give up this time, and the risk towards the outside is quite limited. But of course, if we have some bad news coming from the US, then this is the level to surpass to see the pair gain some upward strength. Still, I was watching that 630 right here. It's also a major resistance, and it will take the price to settle above this level, right? 630 or so, to begin considering the possibility of a reversal in the euro and some further recovery that anyway I would expect to remain limited by 700, 720. We have plenty of highs and lows. We have moving averages in the daily charts. We have the 38.2% retracement of the same decline. So that's a key area, and I would expect sellers to be aligned around it. Okay. When it comes to the pound, the fact is that we don't have too much to work with. If you take a look at this you will see that we have been steadily consolidating with a slightly negative bias, but still not confirmed. Pair has been quite comfortable between 2340 and 2540 for me. If you take a look in here, this Fibonacci retracement is sort of a line in the sand where sellers are appearing, or at least bulls are taking their profits out of the table. So only when daily close above this level, I would dare to talk about the possibility of a bullish pound, right? In the meantime, playing the range could be the case. We have this week low and last week low in the 2380 region. If the pair lost that level, then this February low, 2346, and the 50% retracement of the latest bullish run is the next support, right? But if the pair losses 23, 20, 45, then I would expect sharper decline towards 2250 or so. I'm inclined to go for that short position rather than at this point, or at least today, trying to play the range again and buy in the base of it in the 2380, 24 area. Sorry, it seems like the greenback, it's going to have a good day today. But I'm not sure if the risk worth it to buy it again at the base of a range. Okay. You'll see it's in a pretty similar situation, that the pound heading nowhere. Weekly basis, 1-2 weeks with dojis. This is the third one, and they were still there. I have mentioned multiple times that it has been the pair has been unable to break above 77 for years, right? Take a look at the chart. We have a couple of spikes above that level in 2016, but we have been below it since the first half of 2015, right? So really, it's a risky level to watch, but at the same time, we have no real bearish signs, right? The pair has been stuck in between 76 and 77 for over 2 weeks, unable to find a certain direction. I still believe that spikes above 77 are a sell, or at least a take profit, right? Buying near base and profiting there, with the Aussie particularly backed by the fact that gold remains strong, and then Chinese data is being stronger than expected, and therefore implies that demand from the country, China, I mean, towards Australia will remain strong, and the economy will hold on well, right? The Reserve Bank of Australia released the minutes of its latest meeting last night during the past Asian session, and it was a bit disappointing for the market because they hint that it will keep rates low for longer. There's no chance that Australia would raise its rates. In fact, as I mentioned multiple times, I don't believe the Reserve Bank of Australia is comfortable with pair at these levels. They prefer lower. We'll see, right? So they will try to remain on hold, right? And wait for the US to take action and help them to make their currency cheaper. Speaking of which, uh, what it's limiting dollar gains, but we are not seeing the greenback skyrocketing with the chance of a March rate hike, is the fact that Donald Trump has complained multiple times about having a strong dollar not being good for their economy against China, against Europe, against Japan. He criticized and spoke against everyone pretty much. But the fact is that his announced policies of uh, growing, boosting inflation, boosting growth, and therefore working with America, right, should boost the greenback. So that's what's generating uncertainty in the US. It's not whether the Fed will raise rates or not, is how Donald Trump will complain with all of his different and opposite ideas, right? Anyway, as I was saying, take a look at the dollar Japanese yen or the gold prices, right? We had, of course, some retracements today in both currencies because of dollar strength, but the upside seems still well limited. I was looking at dollar Japanese yen, strong retracement we have, that's 15, right? Spike, we have posted the line. We are 150 pips below that level. The euro is 20 pips away, right, from the peak it made after the Fed. That's what I'm trying to make a point on about safe havens, right, being anyway strong and on demand. But anyway, what I'm trying to say is that despite we may see limited yen gains at this point, the upside is well limited. Um, Although as long as the pair holds above this 100 simple moving average. We have been testing it since pretty much since February started, and so far it's providing a key support, which today is around 1270, and of course this 12 area is the next support, followed by the lows around 1160. Those are the levels I'm watching. I'd like to see a break below 1160 to talk about bearish extension towards 110. Or even consider the possibility of another retest of the 100 simple moving average in the daily as a buying opportunity, but I will rush to take profits out of the table on any approach to 14.15. Honestly, I can see dollar Japanese yen really rising unless, I don't know, maybe in March when the Fed said, yeah, we are rising rates, then, well, that will be a scenario in which the dollar Japanese yen will post sustainable gains and not before. Anyway, from here, 1410, that Fibonacci area and highs and lows area around 1450, 1460, and above that level 15, of course, is the next resistance. I'm not seeing the pair moving anywhere higher than that, at least for this month and the next. Remember that, of course, unless we have a Fed announcement. Remember, I told you Japanese fiscal year ends of March 31st, and therefore there's little opportunities that the Japanese yen will plunge ahead of the close of the fiscal year. Tends to appreciate during February and March. Tends to, doesn't mean it always does it, but well, it's a chance. Anyway, I was surprised today when I woke up by crude oil prices because they are higher, right? They have rose overnight, right? I'm pretty sure why we have this strong uptick in the price and the breakthrough the roof of the latest range still by a few cents, nothing really outstanding. 55.20 is the key resistance now and the road to surpass to talk about a stronger oil, right? But I believe that we are not going to see such move, particularly because we have a strong dollar across the board. And of course, we will have the first stockpiles report announced by the US night later today, right? So I would expect that to contain the commodity, particularly if the AP reports announce another large bill. You know, the OPEC has cut production, has compiled with their agreement in January, right? We have not much news about what happened during February so far, but well, in general, we are pretty sure that the OPEC is cutting production to keep um, uh, prices higher, okay? But what's playing against that is the fact that US production and stockpiles are rising at a much faster than expected pace, okay? So if we have another bill in US stockpiles, then the probability is that the price will probably capitulate from this area, particularly because of technical resistance. But anyway, um, supports, I would say 53 is the main one. We have some in the way, of course, 54 and 53, 60, yeah, if I'm not wrong, I remember well. And of course, 53 below that 150 to 50 seems a probable bearish target for me in the case of downward move. I do believe that spikes up to 56 would probably provide interesting selling opportunities. Okay. And when it comes to the prices of gold, take a look at the daily chart, right? We are hovering there around this 50% retracement also of the post US election slump. The momentum in the daily chart and in the 4-hour charts has been diverging for a couple of days, right? As prices move higher, the indicator was moving lower. Now it's turning actually bearish, right? But still within positive territory. The RSI also within positive territory. The 20 simple moving average heading higher after crossing the larger one. Everything is telling that there's a possibility of a downward corrective movement as we are seeing, but there are no clear bearish signs coming from the charts at this point. Nothing that's telling me, okay, a top has come and that's it for gold, and we are going to see it coming back down. What I have also noticed is that we have sort of a double top in here at the end of the bullish movement. So I'm considering the neckline at around 1216, which is last week low, right? So maybe a break below that level will result in a $30 slide in gold prices, which will put it closer to 1190 or so as a probable bearish target. And I would say that a break below that level will make bulls capitulate, and only that, okay? In the meantime, 1244, which are those highs, are key resistance, followed by this 61.8% retracement of a mentioned decline, 55.15. I'm pretty sure that's the most we are going to see for gold if we see some further upward momentum, because regardless in the ongoing uncertainty, we have the opposing dollar strength to it, right? So consolidation, limited declines, and rallies contained by 1255 if the case they happen, okay? That's what I'm seeing in gold these days. As I said, when the dollar is strong, I will be wary of trading safe haven assets against the greenback, right? Like gold or the yen. In the opposite case, if we have negative dollar headlines, right, then I will rush to trade the dollar Japanese yen towards downside. Okay. If we have positive dollar headlines, I will rush to sell the euro. That's what I'm thinking at this point, at least. Let's see what happens later today with the Fed speakers and more particular tomorrow with the pump minutes. Okay. Anyway, I believe that's it for today. My time is up. So thanks, guys, for being here. Thanks for bearing with me with this half hour. And see you back soon. Okay. Thank you and bye bye.